you have to look at it in terms of the type of the houses which are provided mainly in the upper region and the lower region. In the upper region, you're talking of mainly bungalows, townhouses, and maisonette, which occupy a bigger piece of land. But in the lower end, you're talking of mainly the apartments, where the cost of producing one unit is much, much lower. So if you have 1 acre in in a upper market, and you can only put maybe 3 or 4 or 5 bungalows, but if you have that 1 acre, and even assuming it's the same price and it's in a lower end market, you can put up apartments. So the cost of production or the cost of building per unit is much lower in the lower end.
The trend that has been taken from the third quarter of 2013 in terms of the rate at which the house prices increase has been on the decline. And that is why we are seeing now the house prices increase by 0.38 during the second quarter, compared to 1.1% during the first quarter, compared to 1.58 during the fourth quarter of last year. So you can see how the trend is behaving. And I think this trend is not surprising when you look at it in the context of the way the economy generally has been behaving. The Kenya National Bureau of Statistics released their first quarter GDP numbers that they indicate that the economy grew by 4.7%. So if you step back, this is the slowest growth insofar as the first quarter performance of the economy has been over the last 3 or so years.
The message here is that the prices are still increasing, but the pace at which they're increasing in quarter 2 is lower compared to the pace at which they were increasing in quarter 1. Now, for a bump to happen, what happens is that if you are to draw that graph, you have the graph moving up, then all of a sudden you get a slump, it moves downwards. So we are not saying that we are the slump. What we are saying is that the graph is still moving up, but that speed, the gradient of that, if you may get the slope now of that price rise as per quarter 2 of 2016, is more gentle compared to the previous.
Potential homeowners are effectively not able to access credit, and so from that perspective, their ability to acquire properties is limited. And also on the supply side, in terms of the number of units coming up to the market, is also affected because of the unavailability of project finance to the project developers, the property developers who effectively supply the market with the units. So we can see that the impact of this slowdown in credit is actually affecting the real estate sector from both sides, from both the demand side and the supply side as well.